start kind of putting that in motion, and when you're trading to figure out, am I with the right crew here, or am I fighting the crew, the buyers or sellers here? And I think it will help you in your trading as well. All the other technical analysis that you guys do on the charts is in order to support your thesis, whether you should be long or short. Does that make sense to everyone?
Yeah.
Okay.
Yeah. Yes.
So this is simple, right? I mean, the market spends a lot of time in balance, and that's where, the dealers, the market makers, you guys, I don't know if you ever heard of the term locals. That's where they make money, because there's a lot of liquidity when you're in balance and trading. For instance, on the top picture here, they know they can get a lot of buyers and sellers. Hence, the number of transactions and volume is going to be pretty high. Usually when you have an imbalance there, you're going to have a one imbalance candle. And if you find those imbalance candles on volume profile or market profile, the time spent on that one imbalance candle is going to be minimal, right? There's going to be a big old candle. And I mean, how much can you fit in such a short period of time is probably minimal. So when you think about the time, price, and volume, they're really, really integrated and correlated. The more time you spent at a level and you're not making higher highs, what happens to the value area? It strengthens, right? That's consolidation. So the more time is spent there, what do you expect to happen with volume in that area?
A lot of volume.
There's going to be a lot of exchanges. A lot of volume is going to be balanced. Hence, we call that balance and equilibrium. Once you reach out of that box, right, or consolidations like the second imbalance here, you're breaking that box. So, if you think about a balloon, you have a balloon and you're kind of, putting air into it. Eventually, there's, it needs a move. It needs to inflate or deflate, or if you keep pumping it, it's going to pop. And that's what you can think of as imbalance, right? You're in there for so long, and now, whether you knew or not, right, there's a whole theory that market efficiencies, right? The market knows everything at the same time, and everyone's happy in the market. I don't know if you guys ever read any books by Graham about the efficiencies of the market and understanding the value, and he believes the markets are efficient. There's always a price for everything, and then there's a lot of scholars that believe that that's, they fight the theory that that's wrong. And I'm with those guys that I think it's wrong. I think the markets are effective, but I don't think they're efficient at any point in time or every point in time. Like example of long-term buyers and long-term sellers, they're never going to cross paths. I mean, you're not going to have people wanting a price of something at the same time at all times to be identical. If that happened, the volume, insane. And we experience when there's low volume and high volume, right? When there's excess supply or excess demand, that those are the things that matter. So if you guys, and I know I've preached on this before, but this is an important level chart, I'm sorry, to pay attention to on your charts. And when you think about it on a chart, this translates to if you're trading intraday, if you're a short-term trader, this transfers to your consolidations, right? If I was to go on SPY chart right now, I could probably find 3 on Friday session. There was consolidations, tests, and breaks, right? And sometimes, if you're in a range day, if you're or typical day or a double distribution day, you will find these, right? And you will be able to know how to trade them, but that's in confluence with type of day you have. A lot of you guys want to predict instead of react. When you start predicting, you're not playing setups, you're playing feelings. And that's where you get in trouble. And a lot of 101s I've had, I think 9 this weekend, and then I've had a lot prior. I didn't have any last week, but prior to that, I had a lot of 101s, and a lot of you guys want to react to prices. I'm sorry, predict the prices where it's going to go without a confirmation or a setup that typically pays to your advantage or probability. So put that in your head. You're not going to control the market. You cannot create an imbalance. On Friday, somebody posted a link earlier in Discord that there was a $5 million trade with the notional value. I think it was almost a couple of $1 billion, $2 billion on the Delta hedge. And how many of you guys got $5 million laying around to put in 0DTE? Probably not many, right? So you cannot influence the market. Therefore, you should stop predicting where it's going to go on feelings. Instead, play what you see and look at the balances and imbalances. Okay. If you guys think about this is a new slide that I added, and this is mainly for a lot of you guys. I felt like you guys were confused when we open in such direction in the market. And then you're also confused like, okay, why did it bounce here? Why did it react here? And that why gets covered in the bottom section here. But first here, just to kind of let you know. So typically, you will have something called a passive and an active auction, right? Usually, you want to see a lot of these active auctions kind of being available in the market because that leads to a lot of movements and that leads to a lot of volume. When it's a passive auction, on the other hand, like the levels are already predetermined, and that's when you guys see a huge gap up, right? And then we consolidate in that level for a long period of time and nothing happens. Do you guys recall anything like that on Friday? Did we gap down and then we stayed in the
Yes.
happy auction? Because those levels were already pretty much set by the large orders. So if you guys think about, somebody asked me, hey, can you explain MOC? Well, that is your MOC. A passive auction is your MOC, means that they don't want to participate in the auction because their amount and their intentions would drive the market differently on type of order that they put in. A lot of people see, $1.5 billion buy, and in their head they're like, man, market's gonna rip on Monday. Well, what if they bought, inverse of SPY? What if they bought, I don't know, VIX, or if they bought something else in that amount? Those buys and sells are not directional. Can the algorithms react to those? Yes. Will the algorithms react? Yeah, I would say 8 out of 10 times they're going to react. But even then, you don't know how the market's, the algorithm's going to react. You're still gambling to figure that out. Not every time is a buy is bullish and a sell is bearish. So keep that in mind. And that's what a passive auction is. Basically, you're packaging a sale. And if you guys remember those block orders I talked to you guys about, you guys recall that when you have
Yes.
a huge box and you have,
Yes.
somebody wants to get rid of the, let's say, 1 million shares of SPY. The chances of him getting million of shares at once are fairly low. And I'm throwing numbers that might not be true, right? Let's say a larger amount of shares, then it might not get filled. So in algorithm world, right, in the trading world of high frequency traders, there's different type of auctions that they deal with to get rid of it, right? And if you guys look at, for instance, Goldman Sachs or a few other companies, they have weighted averages auctions. I don't know if you guys ever like researched that or Googled it, but here's your chance. If you go there, they're gonna try to sell every time it comes to a VWAP. They're gonna have a sell order to fill it because at that price they're filling based on volume weighted that they're gonna get the best deal. So every time it comes, and when you see those bounces off the VWAP, that means the VWAP's being used as an auction to get rid of or buy more shares. And that could be, a mix of a long. Let's say if I had 1 million buys at this area and the VWAP is in that range, now the long-term buyer is mixing in with the short term, right? He's coming in today based on the levels the VWAP is, and he's buying there. If there's a short-term seller, let's say sometimes you guys see the little dip below the VWAP and then a huge bounce upside. What do you guys think happens? That's where a short date time frame person, let's say me, you, we're like, yeah, we're below VWAP shorted, if that's your strategy, and then all of a sudden you're left behind and we go higher. That's where they grab the liquidity to buy their shares because they saw some stop losses below and they trigger that, and you're basically left below. And if you don't have a stop loss, now you're screwed. That's why I preach your stop loss should be there because you don't know the intentions of these orders. And a lot of you guys still have that ego. Man, I gotta be right. No, you don't have to be right. Sith, I think it was Sith on Friday or Thursday. He mentioned that he had a losing trade or whatnot. And my answer, if you guys recall, is so what? I had two back to back on Friday, and I just said, let me step away for a little bit. and kind of kind of restart my thinking process where we are.
Yeah, we were in the same trade.
Yeah. So, and at one point that trade was positive for me, Cuban, right? We got the trade. I believe you're talking about the
Yeah,
3,900 puts. It
yeah.
was positive, and it went from
Me too.
125 to 17. But that's where the human greed triggered.
Yeah, me too. I could have stopped. I could have grabbed 30, 20, $30 and got out, but we were waiting for it to go higher and it never did.
Yep. And that's where the scenario B comes from the bottom, right?
And then I lost.
So that's where other time frame buyers came in. And on Friday, there was a lot of trickery with zero DT. And I expect the complexities of zero DT are going to add so much like tricks for hedge funds to actually profit from this. Remember, they see open interest, they see the updates, you don't, and you don't know, we can see the max pain before, but you don't know the max pain and those being updated as an intraday level. So you're kind of hurting a little bit. It's almost like a casino. They have a little bit of an edge on the data and the visibility of what's happening. And you're playing on levels, and that's why your risk management has to be better than your profit management. And
Shorty,
for
yeah,
me, let me
I got it.
finish. For me, we
Sorry.
should have on that one. We should have taken the $60, even though we wanted more. You could have taken, I think 50, 60 was the max you could have profited, and that's not bad. 125, make $60.
Yep.
It's fairly doable. But understanding the auction, are we in the active auction where you're seeing a lot of buyers and sellers and they're inching the price higher? And then you guys started noticing failed auctions, right? Where the price is not facilitating above a level, which means that, even if an auction on the car market, right? A lot of you guys are into the cars. You go and buy cars, somebody, the auctioneer leads the price, hey, 55,000 for this, and not a single hand goes up. Well, guess what happens? Whoever offered the last price gets what? He gets the car. So it's same in the stock market. Whoever was the last buyer, he's going to be back holding there until another auction leads higher. And whatever his targets are, he won't be able to get out till he reaches or break even. In most cases, retail sells a break even at those levels. Okay. Does
Shorty,
this slide make sense? Hold on one
yes.
second, Cuban. I know where you might go, but let's see if people understand this.
Makes sense to me.
I just want to correlate the levels that we chart to the different types of buyers and sellers. And I don't know if I explained that, like this before, where I said, hey, January value area high, if you break above it, it's going to be basically a retest on the bottom. We want to see if these buyers, long-term buyers, are going to come in here and defend, or if we dip below, and then we're going to have responsible selling from those long-term buyers or sellers to reject the price, right? So that's the idea behind this slide and kind of connecting the two dots. Is anyone confused?
I'll be honest, I am a little confused on this slide, but you don't have to wait for me. I'll read it offline and then probably come back with if I have any questions.
No, no problem. I mean, think of it, different time frame levels is most likely long-term buyers and sellers. Short-term frame people like us, we are an intraday, right? And usually what you have is a mix of long-term buyers or long-term sellers and short-term traders. That's the mix of the market. You will never or rarely will you have it where it's a long-term buyers versus long-term sellers. Can a long-term buyer become a long-term seller? Yes. Can a long-term seller become a long-term buyer? Yes. But they should not cross the path as much. Because if I'm waiting for AMD at 55, right, and I'm a long-term buyer, why should the long-term seller be selling at 55?
One scenario that I thought is because sure, stocks go up and down, but over a period of time, they always go up. So eventually, what will happen is at in 2023, whichever is the long-term seller level, probably in 2033, that becomes long-term buyer level from an overall
But you don't think
way.
they would sell based on their profits year to year?
They will, they will, they will. I'm not denying that. I'm just saying, looking at the overall curve of the stock, If they were to go up, then that level, which is long-term sell level now, may become long-term buy level later.
That's correct. And I don't disagree with that. But a transaction of a long-term buyer and seller will not occur at that level a lot
Yeah,
of times.
of course, because at that time the long-term buyer, if that is 55, the seller would be like around 95.
Exactly. Yeah. So it keep inching up, and that's where the market structure is created. The higher highs, the lower highs, and lower lows, and higher lows. That's how the market structure is created. So I agree. Yes. Anyone else got questions on this? I mean, I don't want anyone to be confused. It's fairly simple market auction theory of buyers and sellers.
My question was, what is the algorithms? The algorithms is what, like the basically what facilitates the buyers and sellers.
That's correct. Yeah. So if you think about it way back, let's say, let's give you an example of, has anyone ever been to a marketplace where they sell fruits?
Yes. of course.
Okay. So let's say you have a farm and you sell oranges. If you only sell oranges from your, let's say, house, what are the odds that you're going to get a lot of demand? If not a lot of people know about you.
Oh no, not much.
Let's say every Saturday and Sunday, and I have this in my city here, you go where there's a predetermined place and predetermined time where you will be showcased your products to consumers. What are the odds now?
High.
There's higher. At first, it might not be like the people show up, but if your product is good, right, and the more people talk about it, and more demand, so you have the consumers and you have the producers. In this case, you're a producer, right? If you produce the oranges and consumers can meet at that place, aka marketplace, every weekend, every time, you're now creating a marketplace. Okay. Well, let's say let's say you have a person like me and you that want to buy oranges for personal use, and you're not going to buy 100 pounds of oranges, right?
Mm-hmm.
What if there's a person that anticipates the orange prices to go up over the next 2 months? He sees something in the market, whether it's droughts or whatever, right? Different factors. And he's like, I want to buy all of your oranges that you have. What type of buyer is he? Is he a short-term buyer for consumer use? Or maybe he has a juicing business where he needs a lot of oranges at this price. He's anticipating a lift in prices. So he would be a long-term buyer, right? He would buy here. You probably put them in the fridge or whatever, juice them. I don't know, right?
Yeah.
He would save them, but he would avoid those bigger prices coming in. So that's where is an example of a marketplace being built and the value of the marketplace and the purpose of it's really to facilitate the trade and bring liquidity. Because if you stayed at your house and sold oranges, you would not have as much, you will have a lot of supply, not a lot of demand, and you will have a lot of excess inventory that goes to waste.
Correct.
Okay. Does that help?
Thank you. Yes. Thank you.
An algorithm basically, let's say a VWAP algorithm that, a lot of hedge funds use that. That's why, when you see a VWAP bounce or a rejection, they're trying to get rid of those block orders. The iceberg orders, they are getting kind of, filled at portion at a time till the whole box of the desired state or whatever their intention is emptied out. And they just design, hey, as you come to algorithm, try to sell 100K of this, 100K of this. Not too long ago, Baba had a perfect execution of that on a chart. Somebody tagged me while I was on a vacation of 100K orders on Baba, and I looked back, and all of them were around the VWAP. So immediately to me, it's like, okay, they're triggering this VWAP auction for Baba, and they're just buying as it approaches. Okay. So I
Shorty,
think
can
somebody.
you explain passive auctions with the help of an example like peanut butter used to take?
Yeah. So passive auctions is basically them not giving you everything up front, but rather packaging and selling. So instead of oranges being available for you to buy, right now at this price, what they do is like, hey man, we'll package this and you can buy it on. So imagine for instance, let's say marketplace comes into your city and is like, hey, you can buy this right now or sell it. But instead, this guy is like, hey, instead of the Sunday 9 a.m. to 12, I'll be here. I will stay at 1 for those people that want to buy large quantities. So now there's no auction. He's going to have a price right here. And if you want to buy the large quantity, you're not messing with the people from 9 to 12. Because you will take, if I come in from 9 to 12 and take all the oranges, what happens?
No more orange.
The auction
There-
ends there.
The auction ended. There's no more auction. It's not active. But if I tell you, hey, all the commercial large buyers, I have a packages of orders, 100K pounds of oranges, but you have to be here at 1 after the active range is closed, then, you know, if you're that type of buyer, right, and the intention of you, then you will wait after and come and buy it, assuming that the seller, the producer in this case, is going to have the quantities you need.
So he's
And remember, market's there to facilitate trade. So those dealers, the locals, they, even if they don't have inventory, they borrow inventory from others.
So he's a wholesaler at a certain time.
Exactly. So he doesn't impact the active auction. So that's an example if that makes sense, CK.
Yeah.
And usually these orders, so you remember, you guys recall the dark pool prints and all of those that are not on a typical exchange? Usually passive auctions happen off our networks and they happen on these private exchanges, so they don't impact a lot of, so sometimes, you know, they manipulate the retail where, let's say I've been accumulating BABA 55 through these private networks. Well, how can how can a hedge fund initiate buying in BABA? They just have to place a large order and let the price go up. We notice the volume. And then basically people start buying because they're like, man, look at the volume. It spiked on BABA. Right? That would be the analysis, right? Big volume candle, big price movement. You're like, yeah, man, it matches, right? And rightfully so, you buy, let's say on a retest of that level, but these boys are already been in it. So, and where humans mess up, or retailers, is when it's time to sell, they want more. And these guys start selling slowly and manipulating the market, like Cat recently, if you guys remember. They start manipulating the market, the news, and everything looks like it's going to go higher. People want more, but they're exiting their positions. And then all of a sudden, the downgrades come in and all that on Caterpillar. Okay. Any more questions on this slide? I think somebody might have had one more. No? So this is where I think everyone on the call, you guys will be able to identify yourself here. So in terms of activity levels, right? So you have the short term and the long term, and then kind of the stress levels and anxiety levels for you guys. Our short time frame participants activity makes up most of the transactional volume in a given time frame, right? Because a lot of people, you know, if you think about it, retail as an individual don't make up a lot of volume. But if you consider the growth of retail traders in the past, let's say 5 to 10 years, I would say it's substantial, right? Especially with the crypto and then the short squeeze stocks. We came in volume, right? And especially if you think about the whole AMC fiasco, I mean, some hedge funds, you know, lost a lot of cash due to short time frame people and, you know, organized buying of calls or shares and causing it, you know, for covering purposes on the long term, I guess in this case, short sellers to panic. So if you think about this, a lot of volume on short time frame happens within a given time frame, right? So if you're trading 1 minute and there's a lot of movement on the price, that means there's a lot of volume being exchanged. Hence, the price is going up and down using the price discovery tools, right? We agree here, we no longer agree, we search higher prices, and same happens up or down, right? Long time frame participants activity usually is a small amount of volume in the same time frame. Can anyone think why?
Because they are at the extremes and not in between.
That's correct. What else? Anyone else?
because they are passive, as in they are sitting there. They are not aggressive. The
That's
short time
correct.
frames are aggressive.
They only become active when the level is hit, right? So the fourth bullet where it says anxiety level for a long time person goes from passive to active. I mean, think about it. Hedge fund is just sitting there till it hits to their level. Their anxiety level is relaxed, right? You're not really like, oh my God, oh my God. They don't do that. They sit and wait. And same with us, right? If you guys recall, remember when AMD was like 150s, 160s, when I stated that we were going to get some orders in $50 and $60, I became a long-term buyer at those levels. And I went from passive to active, right? I bought some at like 58s and I sold them at 86. So for me, I became active at 58s and then I went back again and sold it. And I'm again waiting for a period for me to get back in. So I'm still very passive on AMD till it reaches my level. I'm not interested in buying in this range right now that it's in. Does that make sense?
Yes.
And then, if you mix these both, that's how you kind of create the volume, right? So if you guys think about, I mentioned earlier, you have short-term buyers or sellers. They're usually going to transact with a long-term buyer or a long-term seller. And usually whatever on the long-term side is more aggressive is which way the market goes. Because they're the ones with those huge orders sitting at a certain level, right? And when we say a supply is very strong, that means, usually you have couple of orders sitting there that are getting filled, and that supply is overwhelming the demand, and basically the ask overtakes the bid side and the price dips. Does that make sense? Can you guys visualize that in your head? And same is true for bid and ask.
Can you say it again, Shorty, please?
Yeah. So if you think about this, the volume is going to be transacted between short-term buyers and sellers, right? And then you have those long-term buyers and sellers. If you're coming to a level and it keeps rejecting at a point where, let's say, SPY and the 410 level, right? We see that we are reaching that level. We breached it. We went to 418, but then we dipped quickly below the 410. If you guys recall, I mentioned the 410 is most likely going to be used as a trap. Does anyone recall that?
Yes.
Okay, so 410 was used as a trap because they had the ability and they had a lot of orders to fulfill potentially on the sell side, right? To fulfill what they want to do and the intention of the market and of that hedge fund or multiple hedge funds. So those large orders that were resting for sell were fulfilled probably by a short-term buyer and thinking we're going to go higher. So the liquidity was created by the short-term buyers, and the selling was mostly done by the long-term sellers because we brought it up from 350s all the way to 10 and 18. So now these guys were given a better opportunity to sell. So would you think, if you think about this, would a producer, and I'm asking you differently, or a consumer be interested in higher prices?
Producer.
Yeah, that's correct. If you're selling oranges, right? If you can sell an orange for $6, would you rather be interested in producing and selling at $6 or selling at $2? Right.
$6.
So yeah, exactly. So the producers are always interested in higher prices, while the consumers are interested in where? Where does the guy want to buy peanut butter? Is he want to buy it at $10 a jar, or he wants to buy it at $2 a jar?
2.
So the consumers always seek lower prices, right? And that's the marketplace as well. The buyer and the seller. So a seller, if you give him the ability to set, if he can get rid of it instead of 410 to 418, but not trigger an algorithm to go higher, that's where he probably might do that. And if you guys recall, even on SPY, we said, if we go over 420, high chance we hit 430. Right. So those concepts of long-term buyers and sellers and the levels become important. And you sell them, you figure them out based on, hey, did we hold the 410 level once we went over 418? No, we didn't. So what does that tell you about buying? That level, not very aggressive, right? There's not a lot of value for those buyers. But how are we doing with the 400 level? We dipped below, but we were quickly, we're coming back to it. So that level is driving, whether it's valid or not, but it's driving price action to come back to it. So it's kind of like pivotal point right now.
Very
Okay.
important level. Yeah.
This covers what we already covered. I added this slide after we posted the question to you guys. Rarely is this going to happen on the bottom. And if you had only long time people buying and selling, how do you guys think the volume would look like?
Way high.
How would be liquidity of the market if we only had long-term buyers and sellers?
Volume at extremes, nothing in
Low.
between.
The volume overall would be really bad because you would have people waiting from being passive to active. And you wouldn't have these in between where it's midterm, short-term traders filling in the gaps, right? So long-term buyers and sellers are not, I'm not saying they will never, there's a chance, right? Where like think about Cathie Wood. If you go back to her transactions and look at what was the company that does virtual appointments, what's it called?
Teladoc.
Teladoc. If you think about that one, right? I mean, if you look at her purchase levels, maybe there was a long-term buyer buying from a long-term seller. And how did that work out for her?
Not too well.
Usually a long-term seller wins in those cases, I would say. Unless you know something that the market doesn't know or the people in the company, it's usually going to go against you, right? If you're a long-term portfolio builder like myself, I build it for my kids and myself. I don't mind buying something where, you know, it looks beat up, the fear is there. I don't mind buying and holding that. And you just have to avoid the feeling of, oh my God, it's going to dump lower. If you have the levels where it could dump, you have to still set the stop loss where you don't want it to go below, but be realistic. If you're going to hold it for 10 years, like let's say Triple M company, if I can get it at 100, well, my stop loss probably be somewhere around 30% of that. And then if it dips to a certain level, let's say below that, maybe I become a long-term buyer again. It just depends how the market looks and, you know, the company looks and what's the, you know, the products that they're selling. Okay. So just keep that in mind as you're trading. I promise it will help you along with the trend days and what we're going to cover with the value areas. We've seen this slide before, you know, price, time, and value. And what do you guys see on time and sales?
See the orders actually going through with the size.
And what three
Big
factors
orders.
are filled in on them? What's the three most pieces that you see on time and sales?
All three required for
Bids,
value.
asks, time.
It's time, price, and volume. You care about the bid size, right? How much did it go through, the price, and then what time. And if you guys look at the flow, a lot of you guys, you know, whoever uses Black Box and, you know, you're like, okay, well, they kept buying, let's say calls here, the IV is going up, which is not relevant in this picture, right? But IV is going up, but they're buying more and more and more, right? So time, price, volume created the value. And it always will create value, these three pieces, right? And when we, you know, in this Discord, what we focus on is we have the price and the volume, and I've added bits and pieces of time for you guys to consider, and that, you know, we will do the TPO probably in next class, where we break it down to similar fashion what we did with this PowerPoint, where you guys learn the market profile to at least understand the TPOs and, you know, how to look at them, right? One TPO line is 30 minutes. And if you see an auction, not, you know, let's say I'm giving you a visual, if the time and the auction are not agreeing within the value, you should see single prints coming out of that and leading higher above the previous day's value area, right? And that's where you create different scenarios in your head on how it can work. We'll cover this now a little bit more detail for each one. So in the time, I mean, a lot of people, I would say, think of only time as we're open 9:30 and close at 4. How many of you guys think about that?
No, not really. I mean, it's a set time, so I
Yeah, but when people think about stock market and the time, concept of the value, a lot of people don't see more beyond the open and the close time, I would say. But time is really, really, really crucial, right? It's crucial in options because of the decay, right? You have theta that works against you. But if you think about, let's say Friday, I was trading, I think it was 39.50s. Where are we? I think it's 30. I get dyslexic. I think it's 39.50s or 39.50s. I was trading those because based on the price action that I was seeing, right, when we were going highs, right, I was able to buy 39.50s and I was buying more time on those contracts. So the 0DTs don't really fluctuate and impact me so much. So I needed more time to correspond with the price discovery that I was seeing. That makes sense. So the timing was important because the 0DTs were losing value, right? At the end of the day, for 0DTs, the market maker is going to bring in the contracts down and bring contracts up, as we saw, based on their positioning and their delta hedges, right? So they can manipulate the 0DT, especially, KSN pays attention to this. In the last 20 minutes of the day, they can bring a contract from, and we saw that, right, from 40 cents to 6. I mean, it happened within 3 minutes.
Yeah, I've noticed that.
Right. And that's for them, hey, we have to get out of this range, go to this range because the max pain, and then they will close sometimes at 3900.01. Right. And just to kind of price you out of, let's say, if you're in 3890s, those become worthless. The 3900 puts become worthless. All of those things kind of play a role in the time frame. I would say the time validates the price. If you think about the market profile, right, the TPO profile, it tells you where the price spent most of the time in. And when you think about volume profile, it tells you where the price occurred the most based on the volume. If the volume spent a lot of, if the price spent a lot of time within a certain level, what did we say from the first slide?
That there's value there.
Well, there's value, but what happens to the volume? If you're spending a lot of
increase.
time, most
Not
likely the time and volume are gonna correspond to one another, right? And where it happens that it doesn't, there's usually some kind of an anomaly in the market. And there's arbitrage companies that basically trade on the arbitrage opportunities, and they will exploit that, right? There's multiple ways to exploit that, and there's really complex algorithms that they use to exploit those little differences. Even if it's 10 cents on something, they will exploit the hell out of it because they trade with volume and in large amounts. So 10 cents on something is huge if they know that 10 cents has 90% chance probability of working, right? So that's where you want to look at, and I showed you guys on TOS quickly last week, where you can set up the TPO. Do I trade solely based off the TPO? No. But does the TPO give me a level of confluence and certainty? Yes. Right. Especially when I look at the value areas, if they're matching, if they're not matching, how we're opening, time is very important. And like the third bullet, time a given price yields volume. That's what we just talked about. If the more time at a price VA is spent, that's where you create the value area based on volume profile and time. So that's a really good confluence to know. If both agree, then that value area is building a lot of equilibrium, and most likely it's going to stay there. So that means the longer it stays there, a higher force of volume and buyers and sellers is going to take to get it out of that value area. And just the fact that dealers, locals love spending time in value areas should be enough for you to know that dealers probably position themselves for a move up or down properly while you're in that area. Does that make sense? Hedge fund market makers don't tend to lose money on their positions. They make money on transactions.
Yeah.
Does anyone know how to give an example of the last question?
Spread.
Give me an example of a regular Joe buying and selling.
You mean from a dealer perspective or?
No, just your life. Time also regulates opportunity. Does anyone have an example? How would this work?
At a certain time, let's say Walmart has a sale for shoes that are $100. Now they're $25, but only at 1:00. Then then I would take that opportunity at that
Okay,
time to buy those shoes at $25.
that's correct. And I mean, the US economy creates so many of these structured formats of time opportunity, aka Black Friday.
Black Friday, right?
If you don't want to sleep that night and you want to go to Best Buy at midnight, you might get a TV deal, right? Does that make sense? And same happens on, if you think about the retailers, right? Like Macy's, my least favorite store. Uh, what do they do, coming up to a Christmas season? What do you think happens to their inventory?
Lots of
builds up.
inventory.
They build up a ton of inventory, right? And then they have, the jingle bells playing and you feel all festive and you're okay to spend money. They make you feel good in the store. You go there and you spend money, but let's say they still have excess inventory past Christmas season. What happens in January?
Discount the hell out of it.
They discount the hell out of it. And then
Yeah.
if you're a responsible buyer, let's say you wanted to buy that coffee machine from Macy's and during the Christmas season it was $100. Well, now, the producer, aka Macy's, might sell that. Let's say it might have a 2-day sale, and you guys see this probably all over. 2-day sale on tech or Amazon Prime Day or whatever, and they discount that, but usually it's not discounted at more than what they can handle from their balance sheet. And that there comes a point where, if they discounted it and there was still no demand, well, then that's where Macy's gets in trouble, right? If they bought those machines at 50 and they're selling a discounted price of 60 from 150, their already margins are squeezed on it because they're just trying to cover their money and their losses. But if there's no demand at that level, right, just like the peanut butter example I've been using a lot, then the auction has to go lower. Hence, another discount has to be implemented by Macy's to get out the inventory because the inventory itself has a cost, right? I mean, and the same thing for a dealer. If he's buying, let's say somebody sold 1 million shares of Tesla at 200 and a dealer now bought it, right? Because he has to create liquidity for it. Well, and another, let's say seller comes in, sells another million. Now he has 2 million. Well, what do you think dealers' positioning options are right now?
Not too good.
Well, he has to think of ways how to give back to somebody those
Right.
2 million shares of Tesla. And that's when you see sometimes I say compression is happening. They find ways to get the price up, trigger low sells. And then, of course, they use the bids and the spreads. And then they use options, which were intended for that. In that case, they might start selling some calls, right, against the shares that they got. And then they might start buying some puts to protect themselves or different instruments, VIX or whatever, to protect their position to become delta neutral. But if an overwhelming amount of more sellers come in, at one point they might just have to sell and find another local to buy it and let them eat the cost. They might just have to take a loss and proceed, and that's same thing in Macy's. At one point, they might just have to eat a loss instead of trying to find a buyer that's willing to spend a certain price. Does that make sense?
Yeah.
Makes sense.
Okay. All right, price. So this is the kind of like the last component of this. Price basically is the discovery, right? You guys will not buy based on time. You're not going to say at this time I will buy it without considering where is the price level. And it's the same, in the stock market, right? You should be buying at the bottom of the values where the value of that product or stock is good versus, buying at the top where you have zero to no value and it's really expensive. So think about the peanut butter guy. If you just put simply a chart, right, of the value being, $10 at the top and the value of the price of this good being at $5, most likely people will buy and protect that $5 level because they don't know how quickly other buyers are going to come in at the level. So they're willing to pay 5 instead of 10 because they see it as a discount. And the same thing happens, in a stock market, especially when you add some, fundamentals or technicals. In this case, like if you add fibs, and there's a notion that if you're above 50%, you're paying premium. If you're below, you're discounted. The value area does that for you, right? If you're at the bottom of a value of a certain time frame, let's say when we hit, if you guys recall, I believe it was 2020 value area high. I forgot the exact level. I think it was, don't quote me, but like 36.53 or 4 was the value area high where we bounced from. And I personally thought that they're going to show up there and respect it because it was a good value for those long-term buyers that missed the opportunity when we started that crazy run of 2020. So the price and time create an opportunity. In this case, price was good. The value for them matched. And if they bought it at 36, they had the opportunity to get 700 points, right, to 4,200 recently and get rid of it. Okay. And the bottom is what we talked about earlier with the oranges, right? Low price attract buyers, high price access attract sellers. And you can relate this to commodities as well. If you think about gold, right? To produce gold, there's a fixed cost for the operator or producer, right? He has to have the machinery, the water, the electricity. There are certain bills he has to cover. So if the price of gold on the market right now is super low, what happens to the producers?
They cut production.
They simply cut production. And then what happens to the market for the gold?
Price begins to fluctuate and find new value.
Exactly. And that's, if you relate this to the stock market, it works the same exact way. You just have to be able to note what time frame buyer seller are you and what are your intentions, right? Some of you guys have the intentions of being a buy term, short-term buyer, but you have expectations that the price is going to go to some level. And that's where I made a mistake Friday, right? I had the greediness and expectation that my contract can yield 10x when I should have been happy with 40% on a short-term buy sell.
I laughed, man, because we were both there.
Yeah, and for me, the loss wasn't like impactful, but it could be impactful if my account, the 1K account was, let's say, at 1100. That would have been a big loss.
Yeah,
right?
I lost pretty good.
But if my accounts, let's say, doubled and I can afford to take, let's say, 70% loss, then I can deal with that without impacting the compounding and the effort of getting the account to grow. Okay. So does this make sense so far? So we covered price, time, and then volume, of course, corresponds. There's really no volume study that, or something that explains it, right? We know based on Anna Cooling's books and research, you want the volume to correspond to the price as you're moving, right? If you're trending up and you have a lot of volume, there's a high potential for continuation. If you're trending up and there's a lot less volume coming in, that tells you the auction is, just think about the auction. The auction is not getting as many buyers at those levels. So now there's a high chance for reversal. Now you add, the value areas. What would you expect to see if you're trending up? What kind of value area stackings do you expect to see in terms of market structure? Does the price chase the value or value chases the price in the trend market up?
The price. Oh,
Yeah, you're right. If
yeah,
you're
of
trending
course.
up,
Yes, because price is
value,
discovery. Yes.
price going up and value is chasing the price. And that's sometimes a really good, healthy trades that we can occur. And that's the one that you want to be in, right? I mean, pretty much 2020, 2021, it was value chasing the price. And if you look back, if you can figure out the trading view and the replay crap, you can see, I mean, even on monthly charts, I mean, it was one after another. It was like stairs, literally going up. As soon as you see the starts overlapping, that's telling you a little bit that auction is slowing down. Not as many active, aggressive buyers are stepping in. And then, it might be the fear, it might be whatever is happening in the global economics on the macro side, but it's telling you something's slowing down. And then you can relate that if you're a short-term trader on the session profiles. And that's where we talked about it, right? Looking at session profiles and seeing how they're building value and where we are rejecting, it starts making sense how the market's seeing the price. And on this slide on top right, this is important. You know, if sometimes we wait too long, and this happens in our group as well, where people are like, man, I wanted 3 cents lower. Well, guess what? The other buyers, they don't care for the 3 cents lower. They took the opportunity and they ran with it, right? So being active, especially at the right time, is important. You know, let's say you go to Macy's and, you know, whatever the product you want is no longer there because, you know, let's say you wanted a lower price by $10 on the coffee machine. Well, somebody who didn't mind paying $10 more, maybe he had a business on Amazon and he saw that he can sell it for 90 and make 50%. So he didn't care for that, right? So he's willing to spend more. And that's where you guys have to, as traders, find the value. And I say it's not a single level, but rather a zone where you're buying and selling.
So we don't miss the entry, correct?
You don't want to miss the opportunity sometimes. Okay. I don't think I have to cover this too much. You guys are familiar with this. I want to focus more on the newer slides. So this is the type of buyers and sellers. Just know when you're breaking value areas, usually it's initiative. And when you're kind of responding to a top and bottom, it's usually responsive, and those become aggressive or passive and kind of leads into the responsive buyers and initiative buyers and sellers. Does that make sense, or I need to cover it?
It's good.
Okay.
We're good.
Tape, I think we've covered this, the exhaustion types. We covered the order types. I'm not going to spend a lot of time. A lot of you guys should be familiar with the volume profile and what it means. If you're not, I think you can go through this volume PowerPoint and kind of figure it out. And if you need more help, I don't mind holding another class where we cover the volume profile and details, but pretty much all contained within here. And I suggest, you know, if you're a beginner book is the Trader, what's his name? My brain fart now. What's the name of the guy that wrote the volume profile book?
Trader Dale.
Dale, yeah, Trader Dale. I think that's a really good beginner's book on volume profile. Once you understand that, I think you can go into more details where we're headed now with the value areas and certain setups that we kind of expect to see it. Just know that this is all about probabilities rather than, you know, something illusional or feelings. We trade based on probabilities, not, you know, predicting. Bell curve here, and you guys know about the value area and the importance of it, is basically your 68%. Even though every broker sets it at 70%, I'm quick to change that to 68 all the time because that 2% plays a role for me. Okay, I'm not going to cover this. Does anyone need me to cover this?
I'm good.
No.
All right, so this is where certain setups happen, and this is where you guys should start paying attention to it. I think Bean and last Friday, he said that it helped him, or Thursday, I don't know which day it was. And it was good to see people kind of figuring out, hey, where do we open in relation to the previous value area and range? A lot of you guys, you know, you look at it and it's like we're above PDH, we're below PDL, but you don't correlate that to the logic and the strengths and the auction. If you're opening inside the value area, it has a meaning, right? And if you're opening outside of it, it has a meaning. If you're opening outside of it in the range, it can tell you certain things that help you determine how you're going to trade it, and you know what's the probabilities of your setup working, right? So with that being said, you know we can cover. Well, did I skip a few slides? I added some stuff on the bottom here. We had the first 3 bullets. It's basically what we've covered below, right? So this is the price chasing or not. If you're having stacks and we're making higher highs, higher lows, that means price is trending and price is trying to find the new value and the new acceptance. Where's it going to go? If we start overlapping, and most likely I would say a lot of times it's going to start signaling that there's a little bit of market auction. If you think about cars or whatever market auction you see that it's stalling, that means that we're not finding enough buyers to take this inch higher. And that's where it becomes really interesting when you look at the look at the profiles, session profiles, weekly profiles, depends what kind of trader you are, and notice these things. Like if you start noticing overlap on the weeklies, well, it might be a longer pullback than if you notice it on the dailies, right? If you're in a strong uptrend and dailies have 3 days of overlap, but the weeklies still no show overlap, then it might be a little retracement to, let's say, previous day value or previous week value area high and bounce from there. That's probable case, right? That's how I look at different time frames, different profiles, and correlating to what's happening to the market. Some of you guys mark them, but I don't know, and maybe I'm wrong, maybe I'm assuming you guys don't, but you have to think about who's there. Are the buyers going to be there? What type of buyers are going to be there? And then if you look to the left enough and see if there was, sellers previously in that area that took over, you have to be aware of, the long-term buyers and sellers don't cross paths a lot. Once you understand that and put into the logic what you're seeing, I think it becomes simpler for you to trade. Okay. So first example, when you're opening within PD value area, right? So, okay, logically, if I'm opening within the PD value area, that means I'm opening within range as well, correct? Because it would not make sense that
Yes.
I'm opening outside of the range. So I don't call that out, right? So if you're opening within the area and the first hour, right, the IBH and IBL, we're still within that area. That means we're accepting the previous day value area, okay? Last, I believe, don't quote me, was I think it was Wednesday to Thursday or Thursday to Friday. I think Wednesday, Thursday. We opened inside the VA, but then quickly we went down below it. I don't know what date it is. If somebody has it, you can check. But we quickly went down and then we reclaimed it, and then they had kind of like a V-shaped recovery. I think it was Wednesday, Thursday. Thursday.
Thursday.
So that was that's a pretty difficult date to play, just because you're expecting now for them to reject it, and then all of a sudden different time frame buyers came in and they pushed the price back inside the VA, right? So those days they start with low risk, low reward, and they switch to a lot of risk, and then sometimes reward becomes a little bit squeezed if you're on the wrong side, right? If you're shorting below the PD value area, your opportunity had to be quick. The timing had to be excellent.
Yep.
So if you're opening within the previous day value area, high chances will lead to what we call the 2 types of days, the typical range day. And sometimes if you have the news coming up, let's say a day after or so, probably sideways. And sideways, you don't have to fight the market. It's going to be tight controlled. And that's where market makers, remember, make money on tight spreads. I'm sorry, not on tight spreads, on a lot of volatility within that area. And, does a lot of volume happen on some of those days? Probably not, because the range is super tight. There's not a lot of buyers and sellers. So they're trying to kind of figure out what the move will be based on the event that's happening. So usually if you open within the PD, and within the range, and you accept it, meaning acceptance happens only if you don't exploit or go below value area low or value area high. Can you guys visualize that? Can you guys, as I'm talking, you should be looking in your head 2 lines, from previous day, and the open happens within those 2 lines, but you don't test the breaks of the bottom within the first hour or the top. You stay within. It should be easy visualization in your head.
Yeah.
And on these types of days, risk reward are pretty, minimal, meaning you're shorting the tops, you're buying the bottoms if that's the case. Within an hour, if you hold it, this sets the range day. This is the example here, right? So if you look here, on the previous day, this is the best one I could find. So this is the value area high, this is the value area low. You see us kind of open right here, and we are staying within. We test the extremes, right? And this is, I think, most recent one. But we are really not breaking that and closing above it. So you pretty much stayed the whole day within the previous day value area. You were not too aggressive on breaking and coming back in, which would lead more to rejection and a potential example of closing the next day above or below. Okay. So if after an hour you're trading outside of that range, that's a rejection of a previous day value area. Does that make sense? Why is this acceptance?
Yeah. Because we didn't break the value area low of the previous day.
That's correct. Or high, and you're staying inside and you close inside. So, I mean, usually if you see us staying within the first hour within that area, high chance that you're going to be closing in that area as well. And that means you're accepting that area, value area, as the new value area going forward.
If we're staying within PD value area, low or high.
That's correct, within the whole value area.
Okay.
Okay. Then you have, where you open with the value area, but you're rejecting that. Can anyone think about how that works? Can you visualize it?
Visualize it. Yeah.
Everybody else? Good. And in this
Trend day
scenario,
kind of scenario.
it can lead to a trend day, right? So you have, especially if the VA on the prior day, if it's tighter than usual, and we've had those scenarios, and I'll have an example here, next slide, where the PD value area is really tight, and then once you break that within the first hour, right, that it can lead to a trend day up or down, because that means you're rejecting the value area that was created previous day. Especially if it's super tight, remember the base and the lamp, higher odds are you're going to break it. If the previous day value area was pretty high and you open within it, just think it's going to take a lot more effort to break that range than it would be if the previous day value area was super tight. The tip over effect of that base, once it's tight, it takes a lot more buyers and they have high extremes, the value area high and low. So the odds are in your favor to see what type of day you might have. If it's a shorter value area and within the first hour you're breaking above or below it, that means you're rejecting the value area from before, from the day prior. Does that make sense? You're not agreeing that we should stay here.
Yeah.
Okay. Your risk and reward when this happens are both increasing. And like CK mentioned, it could lead to a trend day, right? There's a high odds that you lead to a trend day when this happens. Does this make sense? So here's the visual. I'll give you guys a second. And then I give you some tips on what to notice. So just kind of go look at it. And what I look at when we open within PD, but we're leading to a potential rejection, the key becomes always that POC, because we know what about POC, that's the highest volume traded there. And then you see these, the wicks that happened. Once you go to the low level of the PD value area low, I would say this is the bottom of it where they're buying. What do you notice about the wicks? They're fairly aggressive. That tells you that peanut butter dropped so much that there was not enough supply, but a lot of buyers. And hence the price quickly reclaimed this PD POC, and you see them kind of accumulating right above the PD POC. And usually what I pay attention, if you're accumulating above the PD POC, like prior day POC, there's a high chance that you're going to be at least testing the extreme high of the previous day value area. And in this scenario, if you guys look, there was a PD POC. If you kind of extend the line, I should have. You see here, this is a PD value area, and you see them coming here, right? We came back here, we kind of rejected it, whatever you use for the bounces, but there's a shelf here and a liquidity stop or liquidity gap. They're coming there and looking for a move higher. And then once you break this, what do you notice about the volume, right? The volume is not really there. It's a poor structure created because the time and opportunity, right? They were quick to get this up and get it going out of this value area. They did give you a little retest on the range retest. Does this make sense, the slide? So this is them rejecting. Don't think about rejection as bearish or bullish. It's both. They could have done the same on the opposite side, right? Where they rejected the price lower and all of the scenario, all the bullet points would reverse. Are you consolidating below the PD POC? High odds you're going to test, the lower of the day on the previous day. Does that make sense?
I have a question about, I guess like the volume, like right
Mhm.
at the end of the day. I know generally like you're not really supposed to, I guess, pay attention to it too much because it's like the end of the day. A lot of orders just trying to fill for a close, but on something like this where you just have all of that, or primarily like the green volume, could you kind of like look at that and then also with everything you explained here?
Like this one here, are you talking about?
Yeah, on that one right there.
Yeah.
Could that
So
give you like extra confirmation?
yeah, of course, and that's covered in the neutral day or sideways D-shaped days, because this is that day right here looks like a perfect D shape with multiple distributions that happen POC kind of right in the middle of the day. But the close, and if you guys recall, the close is telling you what on this day here.
They were strong at the end.
They're strong at the end and they're above the POC and they're actually above the value area high, which leads more to the extreme of a D-shaped profile day, which means it's a neutral day but leaning more towards bullish side. And opposite would be true the same, right? If this day ended below the POC and below the value area low, even though it's D-shaped, it's neutral, you would be leaning more towards bearish side.
Yeah. Makes sense.
Okay.
That makes sense.
Yeah.
Thank you.
Okay. So this one here is not very common, but it does happen, and I hate opening of these days, right? Because they can quickly go the opposite way. But this is a trick day most of the time. This usually involves where you see a B or a D shape the day prior, and then a lot of rules and setups on the B and D shapes is that you short the HVNs or you go long HVNs. This one creates a lot of complexities, right? And this is my least favorite day if I was to classify it to trade. So we're not in balance because you're outside of the value area, means you're rejecting that, right? You're like, okay, there's no value, but you're not so confident because you're opening within the range. So where they're opening is above the value, right where a lot of volume happens, 68%, but they're opening slightly above it or below it, where the 32% of the volume occurs. So for me, if I can avoid these type of days, I would avoid probably till later in the day because that's where I can get a picture where they're falling, right? If they're not facilitating the price above, let's say previous day high or previous day low, that means most likely they might stay there and consolidate, even though it's setting up for a bullish move if it's above or bearish if it's below. But usually this type of day is very, very difficult for me to trade personally, just because it's somewhat bullish or somewhat bearish, but not really bullish or really bearish. Like they're not 100% sure, which gives me like anxiety to be like, okay, man, like, what do you guys want to do here? What I consider the key points is the last points here. Let's say we open above PD value area high, meaning we're above value area high. And if we dip inside the PD value area high and bounce of middle of the POC, like of that range or 50% using the fibs, I usually would say that there's a high chance you're gonna test the PD value area high and go above it. If you lose that POC, then there's a same or equal chance you're gonna go to the PD value area low. My first instinct is that you're gonna bounce at the POC. If you open above VA but within range, then you dip inside the range. Hopefully you can visualize it as I'm talking about. There's a high chance you're gonna bounce on that PD POC. If there was multiple POCs or multiple sessions and the cumulative POC was lining up with this POC, that gives me a little bit more edge if I wanted to play this day to play the bounce on that day. Can everyone visualize this or you're struggling?
Yeah, pretty much.
And then I know on the last bullet point, if this happens, right, I want to see within an hour, how's that value area building up, right? Of course, if it's building on the lower side, right, I'll be more bearish, right? That'll be the opening outside on the lower side. and opening outside VA on upper side, I would expect to see at least higher high on the value area high. Does that make sense? If the value area highs, dipping and within an hour being the same level as the previous day, what's that telling you?
They're not accepting anything higher.
They're not accepting anything higher. There's a high odd that we might go to the value area low and execute 80%. So this tends to be the best 80% rule if you think about the setup. And this happened Friday, did it not? Remember we talked about it, that we had the 80% rule that ideally we open above it, came back low and go to the low of the day. It was a perfect. And I think it was, I'm sorry, maybe I'm mixing days, Friday or Thursday, when we caught that contract go from, I think it was
Thursday.
It was
No, it was Friday. It was Friday. It was Friday, like midday.
I mean, the contracts went from like, I don't know, 2 to almost, I think the high of 16.
14.
Yeah.
Yeah,
Yeah.
Oh yeah, I see it.
It was the one yeah.
Yeah, I
But
think
it
also
was,
June.
and if you think about the points I outlined, you could go look and see where else this happens. And that's why I love, if we go above the value area high and these within an hour, that balance, the value area high starts kind of matching. To me, it's immediately in my brain is like, alert, 80% can work. The value areas are lining up. Even though we opened above, they did not build value above it. And that's when this scenario goes from my nightmare to a beautiful setup. And that's the trigger in my head, at least, that I see, if that makes sense. And I don't know if you guys can visualize it, but I'm a visual person. I see it in the pictures in my head. Like the text is great, but I start immediately, okay, you open between these two lines. The value area high of this current day is lining up here, and you're not really taking the price higher above the range previous day. In my head, it's immediate, okay, 80% rule. Like there's a high odds for 80% rule that can happen. Can you guys relate to that, or can you visualize it?
I can visualize, but I'm thinking about your second last point now, where it says if we open above PDVA and then dip inside PDVA, that essentially becomes 80% rule. And now the point is that, which you made, that most likely it will bounce at PDPOC.
But where's the value area? That's where I said, if the value areas are matching and the price is quickly not going above it, if within an hour my value areas are matching, meaning the value area highs are fairly lined up, then it's a problem, because high chance you're going to execute the 80% rule. But if my value area high of current session after hours setting up higher than the previous day value area high, there's a high chance you're going to bounce at that POC.
Okay.
So that's the difference of the setup. If you're making higher highs on value area highs within an hour, I see them building value higher. Then the PD value area high is a bounce. And that's the next slide.
So that's the scenario where it becomes a nightmare. It can.
It can, yes. But that's when sometimes you're like, do you play the value area high bounce or not of PD value area? Does that make sense? I can draw it and visualize it for you guys.
Sorry, I had a quick question. Like in the third bullet point, I don't get the last line. Like you say, it's right above the previous day value area and accepting above value area, but inside prior day range. If you're
Okay, so-
outside the value area, like could you maybe draw it?
Yeah, we can definitely draw it. I'll copy it over. We'll go through it and then we can draw it. But I don't know if I have an example on this one here.
I think Friday's thing is that example, this Friday, because it was a lowercase b profile. And if we open now within the range, like above 3970, 3980, that should be what I think you're trying to say.
That's correct. Yeah. So usually what I mean by that, if you think about P-shape or B-shape volume profiles, the rules are, if you're having a B-shape and you're trending down, let's say day prior, you had a sell-off. Usually you will come to that POC, and if you close within the POC in the value area and the POC are going to be on the bottom, right? On a B-shape profile. If you're to get out of that area, you're looking for HVN to reject. And if the value starts being developed below the HVN, it's usually a sign that we're going to accept the value area above, and that's where you want to be afraid. It should be a strong high once you reach to an HVN KSN. If those sellers were somewhat aggressive and truthful, that HVN should trigger a strong high, not a weak high, where you consolidated below it.
Yeah.
Okay. And I don't know if that helps, but we can definitely draw it out.
Thanks.
So that's why the value area, if you guys think about this example, this is them. If you're to think about this, if you're opening outside of EA, but then within the range, right? You're trying to figure out if the price is going to be now accepted or not. If they're bringing it back inside the value area and executing 80% rule to the downside, that means they're accepting the previous day outside. It was first rejected, but now they're like, no, we're going to accept this. Especially if you notice within an hour that the value area highs, or lows, depends what the scenario is of the open, are starting to kind of line up. That immediately tells you the auction, they're not willing to facilitate prices much higher on the buying or selling side on the lower side. Does that clarify it? That initial balance high and low kind of help us to define where we might go in terms of the value areas as well.
And I guess like an easy way to think of like the top of the range and bottom is just like the high of the day and the low of the day, right?
That's correct. Yeah, that's exactly it. PDH and PDL. Previous day high, previous day low.
Okay.
That's the range.
That's the range, correct. That's the range of the day. Usually the range of the day is what was your extreme high on the day and extreme low.
And Shorty, I got a question about something that you were mentioning earlier about probability of like the 80% rule playing out. If you're above previous day value area high, but you're below previous day high, and you open there, and then you said something along the lines of, if you realize that your value area high of current session is matching with the value area high of the previous day. So I mean, I guess at that point, because the current session, the value area is shifting, it's still developing. So if you see that the value area highs are of the current session is dropping to meet the one of the previous day, then you're more sure about the 80% rule playing out. That's what you're saying?
That's correct. That's pretty much perfectly verbatim what you stated.
Okay.
Because what happens within the first hour in terms of volume in the market?
It's the highest, highest compared to power hour.
Pretty much 70% of the volume is consumed between 9:30 and 11, actually. The rest becomes the reactions of the dealers to hedge their positions. So now you can correlate to what you stated. Within the first hour, if my value area is set, and now if you think about it, let's say out of 100 million shares, 68% have been set in that value area. How much volume would it take to shift that value area, more or less? It would take a lot more.
A lot more.
So it would have to be a significant volume shift in the later sessions, right? We'll call it afternoon sessions, to change that value. So that's why that 1 hour, for me, when I look at it, is, hey, did that value area high make a higher high than the previous? If it's something like a major increase, like a stepping stone, then I'm like, okay, well, there's a high chance we can potentially then break that area. And the way I think about it is, if we get a bounce, initially strong high bounce on that PD value area high, that to me means that they're accepting the value area to be higher. And that's simply the example of the first slide, if you guys remember those boxes.
Yes.
Right? That to me tells me that they're accepting. If they allow the price to dip inside the previous day value area high, previous day value area, there's a high chance you're going to get a bounce at the POC, right? That it's going to react to it. And that's why, if you guys remember, if the value area high and PD POC for me are close, stacked, I usually say there's not enough reward for me to short the high entrance of the 80% rule. I'd rather short it below the PD POC. You guys recall me saying that a lot of times?
Yes.
Like, if there's not enough meat between the two, there's no value, because I can get this bounce of the 50%, and I'm not willing to play that risk reward game of tight in that case, I would wait for shorting below the PD POC and driving to PD value area low for the 80%.
Yeah, you say it all the time.
Does this slide? This one is a very tricky day.
Shorty, just had one more quick question. When you mean prior day range, you mean like PDL and PDH, right? The whole trading
That's
in between.
correct. The whole session high and low. I'll change the words so you guys are not confused. I see where a lot of questions are coming, so I'll change it PDH and PDL.
Yeah, that last one that you explained, I've gotten caught wanting to continue going, not continue going long, but like shorting, or sometimes even going long at those POCs when we're coming back down, and it continuing to flush, and then getting caught instead of waiting to short after we break that POC from the previous day, or the previous day.
I'm trying to think what you said, and I don't know if I'm following. Sorry.
As he's coming down,
You mentioned you would rather wait to short the POC going down to the bottom of the value area from the previous day.
That's correct. If the value area has POC right below the value area high, sometimes on ES like 5-10 points, to me that's very risky, right? Because I know for a fact that POC is going to have a lot of previously buyers and sellers, and if the price went higher initially, that means that there was a lot more buying at that level and they exploited the area higher. So now for me it's risky to execute the 80% rule because that POC is right there. For me, usually is wait below the POC, let it break, and then go to the value area low. And that's the most, unless the POC is on the bottom, right, which could happen, then it's really an easy day for an 80% rule. And if I recall, Friday was a really good one.
Yeah, I've gotten caught in the past trying to short there, then it bounces. I'm like, ugh. And then after it bounces, I'm like, well, duh, you got to play the bounce of the POC.
So for those days where it bounces, just check how was the value area of a current session, meaning value area high, in relationship to the previous day value area high, right? And how the price reacted to it. If you see, us quickly, within an hour, PD value area high is making a higher high, right? That would usually mean the previous day value area low is making higher low in correlation to the previous value area low. That means you're shifting higher, they're finding value higher. But if the value area high, right, in this case is staying flat and not really making a drastic higher high, then it increases the odds of that 88%. At least it's not odds of 88%, but the odds of 88% working. Okay.
so where it becomes risky is when the POC is close to the value area high.
You can get a bounce, and that's where the trap happens a lot of times.
You want to short under the POC and
Correct.
drive it all the way down to value area low.
Correct. They will most likely break the current session PD value area low and make sure the value is set from the previous day. That happens a lot if you go back test it.
Usually, is there a retest usually under the POC, or
I would say you will get a retest, but you're going to have to be, timing and patience is going to be key.
Gotcha.
If you're a short-term trader, they might not go all the way to PD value area low and let you retest. Sometimes it might, 1 minute candle drops a little bit and comes back and then continues down. Remember what type of trader you are and what you're expecting. If you're trading 15 minutes, that 15-minute candle might go all the way to PD value area low without entry for you.
Gotcha.
Okay. So this can be a hard day, especially if, just think about it now visually, if you open above value area, but you're below PDH and you stay in that range the whole day, that's a horrible, horrible fucking day to trade. Because you're like, okay, we gapped up and now you're not breaking the PDH and you're not going inside the value from the previous day. I mean, it becomes a sideways literally day. And that setup I really, really hate the most. I usually like them going to PDH, getting a nice little hard rejection all the way down, especially if the value area high matches after an hour, then it gives me a little bit more confluence to a downside for the 80% rule. So it goes from the worst possible day to potentially the best, depends how we do after an hour. Does that make sense?
Yep.
And you can
everything.
test this and see the way it works. Usually 80% rules work the best when you gap up or down. And then, you reclaim whether it's PD value area high on the inside to a short or reclaiming PD value area low for the upside. And if you guys notice, let's say Friday session, where was PD value area low? It was in 4,000s, was it not? It
Yes,
was pretty far from the price action, and considering the times we had in a day, the odds of them running that much was lower chances that we're going to push that way. But if they broke that level, I think it was 40, I'm sorry, was it 39.80s or something, 39.78, I believe was the level we said. If it breaks there, there's no odds that we're going to run it up there. Okay. So this one here, that's kind of the opening outside of it, but within the range. We're not in balance since we're opening outside of prior day VA. That's pretty much what I said. We're in a lowercase BRP shape day prior. You expect a rejection. If we open above PD and dip inside PRA and bounce middle of PD or PSC, that's pretty much the same shit that I covered in the previous slide. I think the example here. What do you guys see here? Did we open outside?
Mm-hmm.
Yeah.
And then we start consolidating basically right at the previous day PLC.
Correct. And what do you notice about the value area high?
It's lower.
Close to the PLC.
Value area high is lower. What do you notice about the value area of current session?
Equal to yesterday.
Yep.
Equal to yesterday. So what does that tell you about the buyers?
They're pretty strong defending there.
They're finding value at the lows, but they've explored a price higher, right? For now, they've explored it. They didn't like this POC here because this guy that sold off, especially we closed below it here in this P shape. He made sure they don't spend a lot of time above it. If you look back, and then you basically closed inside the previous day here. And there was a play or two plays here that you could have played, right? Once you went outside, right? I mean, I know the HVNs, right? On the P shapes, you do go long on HVNs, and there was some, I would say this is the biggest HVN here that we had, right? They be able to reclaim the value area. On a reclaim of value area low previous, that's usually a high chance that you can go long and execute what? The 80% rule, but we were never able to make that. So what's your first target when you execute PD value area low entrance?
PLC.
POC. So there's a high chance that you go to POC, and that's where you want to trim a lot of your positions. Usually 70% of your positions should be trimmed there. This other stuff is the shiny stuff that you get if it decides to go from here to here. That's where you can make a lot of money on a smaller number of contracts, but your risk is lowered if you sold 7 out of 10, because now you're only holding 3, and then you can move your risk to not impact you on the profit P&L if you trade that way. Does that make sense?
Yeah.
Yeah.
Okay. The next one is very similar to what we just talked about, right? But this is where your value area highs of the current session within an hour are making higher highs. And this is more in a bullish case that I'm speaking to, but same happens on the opposite side. If you think about this, if you see the value area high is shifting higher when we open within an hour, and let's say we are dipping inside of it, but there's the previous day value area high. Usually that it's truly the opposite of what I covered in the first scenario. There's a high chance that you place an order by order PD value area high and that you get a reaction in your favor. Okay. So if the PD value area high is making higher high, then dipping to that PD value area high, you can expect that the current PD range is going to be broken, and then that PDH will be broken itself. While in the first case, the value area high within an hour was lower or matching. In this case, value area high is making higher high, and you want to buy the bounces at the PD value area high, and PDH, I would say a lot of times will be broken in this scenario. And this leads to a trend day. Because here, was this a trend day?
No.
No.
First day or the second day?
Second day. I always look at a day prior as a base,
No.
not a trend day. Right? In this case, you would expect that the value area holds, right? If the sessions match and the value area is higher than the previous day. If you get a bounce to that PD value area high, that's probably gonna be good for a trend day up or for a trade. I mean, you know, I know you care about maximizing your profits, but you can find these trades to set up profits. And AMD, I would say if I was to trade any stocks on this setup, is AMD. AMD does a lot of this setup here. It really has a personality for it. So if you go test stuff like this, check AMD. And chips in general tend to play this. Well, at least they did for 2 years when we were running chips up. But even now, AMD executes this pattern typically a lot more than any other that I see. So now the question for all of you is recognize this, and can you see these type of scenarios that happen? Right, and the first thing you should do, remember when we talked about the values and tips and tricks, you look at the chart prior, like let's say for Monday, tomorrow, you should look at these bullets and see where the price is, where are we opening, and you can kind of figure out already, hey, if you do this, I do that. And that's the reactive model that you need to build based on what you're seeing in the profiles and based on what you're seeing in the structure, instead of, oh, I feel this is going to happen. Instead, it should be, if you do this, I do that. If you do that, I do this. Does that make sense?
Yes, it does.
Yeah.
So avoid the feelings and put the rules in place to help you. And, I know if you guys look at growth CK's has had, and he posts his chart, he has, scenarios triggered already. He has, where he's shorting, where he's going long. If this happens, I do that. If that happens, I do this. And once you get that behavior, it eliminates you as a human to add your emotions to trade. And it really will help. Okay. So besides this, let me see. There's there's one more thing I just want to touch base on, and is, I didn't put the slide here, but look at number 2 here. What would that be in terms of the extremes type of days you would have?
Most likely a trend day
Okay. Anyone else?
or extended typical day. No.
Undecided, because we don't even know. We are totally outside range, totally out. So there is no relation to the last unless and until you start. You build that IB, initial
That's
balance, I
correct.
guess.
It usually implies the extreme imbalance is in place. Right. So when you're in extreme balance, the risk and reward are high. Okay. So what you start looking for when you're in number 2, when you're opening outside, is really the ranges. The PDH, the PD value area lows. If you open outside, let's say PDH on the bullish case, and you're outside of the area, then you first lose the PDH, you fall back inside. That's signifying that, the buyers might be losing a little bit of steam, right? That they're not in full control just yet. But then, just think about it. You open outside the range and then you fall back inside value area high. Would you think that value area high has the highest probability of working? Or 88%? 80% rule working? Would that be the highest setup for it?
Could you repeat that? Sorry.
In scenario 2, the odds of 80% rule are they if you start outside the range and outside the VA, but then you lose the range and you get inside the PD value area high, are the odds the highest of 80% rule to work in this case, the number 2?
Absolutely.
Anyone else?
I mean, as long as you're below the previous day POC.
Well, you don't know where I didn't state that. If the POC, right, was, let's say, at the bottom, and of course, value area high is at top, the odds are very stacked in your favor to short. Because you did not accept higher value, even though you gapped up, you just broke PDH, you just broke inside the value area high of previous day. Odds are in your favor for shorting. But a lot of times when you open outside the PD and outside the range, the good indication is to see how you react to the PDH. If you get buyers present at PDH, you're not going to go inside the VA most likely. If they slice through the PDH, there's high odds that you're going to start looking to finding that balance and inside the previous day value area. So the PDH and PDL and number 2 come to play in a telling way what might happen.
So there's a strong chance for an 80% rule, right?
Yeah, especially if you get inside the PD area, right? I mean, if you start breaking below PDH or above PDLs, it should be a warning sign signaling, hey, odds of 80% either way might work. Okay. So do these scenarios, you guys think it can help you in trading?
Yeah.
I think it's key that you guys understand these opening relationships and how they can correlate. Especially if you're, for instance, playing the opening range drive, right? Now, for the next session, just think about how this opening range can correlate to these, right? So if you're thinking about if you open outside certain areas and you open drive let's say you're in a scenario number 1 and you open at the high of the previous day high and you get a rejection there, right? Think about where and how that can work considering the value area shifts, the assignment or the alignment of them. You can kind of correlate if the open drive might or might not work as well. Okay, so in the next few, maybe 2-3 weeks, I'll add the open drive types to this, which would add another step to the puzzle, how you can correlate the open drive, a test and a break and the failure of an open drive, which they correlate to the value area's alignment and where we open.
Is Open Drive the same as the IBH and IBL, or am I thinking of that incorrectly?
So the open drive happens quicker, right? So it's usually the first swing high and low. And usually people call the open drive within 30 minutes. That's your kind of orb high, orb low.
Oh, okay.
Yeah, that's at 9. It occurs.
Yeah. Yeah. So
9:30.
open drives are usually quick. If you start in the morning and you dump, right? And usually when you come back to the high where you dumped from, most people expect a rejection. But then when you add pieces of understanding where the value area high, what type of day you have, it increases your odds of being correct, shorting from the initial open drive, or if it's going to fail and we're going to go higher. So that will be pretty much the next piece of complexity and like kind of completing that jigsaw puzzle for, the type of days you have, the value areas overlaps, and then the open drive if you're trading aggressively within 9:30 to 10:30 area. Okay. And a lot of slides after this. I added a few slides, but not something that I would, say, hey, you have to know this for now. On this slide here, I'm ignoring a couple of slides while I left this one here. I'm adding the trend day types, and every one of these days to kind of explain the characteristics of it. And then each one of these days, would you guys think has a correlation to the previous day value area and the current day value area?
Yes.
Yes.
A very high correlation, guys. I mean, there's a super strong correlation between the previous day opens and how you react to what kind of day you're gonna have. Once you know what kind of day you're gonna have, 50% of your problems are gone.
Yeah, I'm starting to see how important it is to notice how we closed and what previous day is in order for me to determine where I'm going on the next day.
Yep. And I mean, it should be a bias that you create, right? And I'm not saying you trade the bias. You have the bias to know based on your analysis what might happen. Bias is not to predict, it's to react to the model that you have. Make sure you understand that. Just because my bias is bearish doesn't mean I will not play a bull side. And somebody said on Friday, well, I was long when you were short, and that's okay. I was playing shorts retracements. You're a different time buyer, long off of a level. You were long on PD value area low. I was, shorting the 50% of that area. And am I wrong? No, I'm not wrong. But it's my setup that didn't work in accordance to the other probabilities. And that's okay. You just take a loss. Okay. So this is the next that I'm going to explore along with the opening ranges. So it should for a lot of you start putting a picture together of, the market auction theory of volume, price, volume equals value, because you would know by then the price, you're going to get more familiar with time. You will know the trend days, and then you're going to know how do you open and how react can give you a trade or two, and you should be pretty much done all the time when you have 2 successful trades that yield profits. A lot of you guys want to spend a lot of time in the market looking at charts, and that causes problems. If you're, 2 trades up and you had made good profit, just walk away, man. Like, if the profit is not even great, that's okay. It's better to grow it than it is to deduct from your balance. And a lot of you guys really, really need to, and a lot of people tell you this, but you need to start thinking about this as a true long-term game. It's about the system and the process you put that you can repeat and profit more so than lose. Once you start compounding this, and there's few people I worked with one-on-one here, they came in and they were borderline giving up. And I posted a few times their results, and they've been green. They've been withdrawing $1,000 a month from $1,000 account monthly, actually in 14 days. Because think about it, to withdraw $1,000, you need a $100 win here and there, sometimes 150, sometimes 30, but those things add up, and in 10, 14 days, you can withdraw 1,000. Now, once you repeat the cycle a few times and you have your setups and understanding of the market, well, let's say you don't withdraw 1,000, you trade now with a start of 2,000, and you withdraw at 4,000. Now you pretty much kind of like doubled your earnings in a month. You went from 1,000 to 2,000, then you withdraw and restart at 2,000, and you could do this with 500 increments, right? But the idea is a lot of you guys are looking at your P&L, but you're not focusing, am I at the right side of the trade? And is my bias, and what's reconfirming my bias? And what should reconfirm your bias is your opens and closes. Then your volume profile, did you close, you're trending down and you have a lowercase b profile and you closed right near the POC, but underneath the value area, yeah, it's confirming more downside for tomorrow. You're in a D-shaped volume profile, you're closing above POC and you're closing above the value area, even though it's neutral day, but it's extreme bullish, right? For that type of day that we are having. And you can correlate that, all to these 6 scenarios. Okay. All of you should know. Is there anyone that doesn't understand what's initial balance? By now, all of you should be familiar with this. Okay. Then we cover all the shapes. I'm not going to cover all of these, but I give you the breakdowns on these shapes and how to trade them, use them. it really should be something you look for. If you're a support resistance trader, you want to tie this with some confluence items like volume profile or even fibs to help you with the confluence of the entries. And I use this when I see it, especially if there's a SR flip on larger time frames, that adds a confluence for me. Okay. A few people that I had one-on-ones, I explained them the pin bars, right, and the importance of it, along with the stopping volume. In the script that you guys have, sequence coded, the stopping volume shows up as SV, stopping volume. It's not hard to spot. You're looking for the reversal candles, dojis, reversals, where the bar of opposite direction volume bar is increasing. And, that's basically them signifying if it's on the top, hey, we're no longer willing to take this auction higher. If it's a bottom, we're not taking the auction lower. And that's what kind of, the signs of the candle formations, right? And if you don't know, these candle formations really came from Japanese rice traders. A guy was able to utilize these candlesticks to trade rice and be the best trader of rice back in the day. This is your examples, right? And kind of break down. I strongly suggest you spend some time and, really understand the PowerPoint, not just do this. Everyone can do this, but if you go through it, understand it, read it, correlate to it, and try to kind of think of this as, a whole conceptual learning of the whole puzzle and put the pieces together, you will formulate your own trading style. Your job is not to formulate or copy mine or somebody else's style, but it's rather to define a style that works for you. And there's a handful of you that have your own style, and that to me is happy. We had a handful of people that built their own even scripts and had sequence coded for them to help them automate what they're seeing. And that's what the purpose of me and you guys should be, is you guys picking up and creating something that works for you. Okay. So I think we covered this. There's a lot of correlation between value areas here, right? On the day types, we talked about this 80% rule. You guys, if you don't know what it is, should just you kind of go through this and read it, right? Read it to understand it. Don't read it to check off an item, right? And I think that's it for in terms of the volume and the value areas. Now I will add the next step to it as well. I mean, we cover these dependencies a little bit and how they work. Some of you guys started identifying these, at least from the charts that you guys are showing. There's certain rules like what the lowercase b should show up in an uptrend or a p in a downtrend and the short cover rallies or whatnot. And then figuring out, who's potentially trapped, right? If you're below the POCs and this, who are trapped people, shorts, longs, puts. Okay. Any questions on today? Do you guys feel like it had value for some of you or no value?
Oh God, yeah, man.
Lot of value.
Yeah, definitely a lot of value.
Okay. So the next step I will work on is to add the trend days and characteristics, even though we have it. I reminded myself of the book, The Market by Peter Stedelmeyer. He has really, really good, guys. The book is really dry, and it's at one point you're gonna be like, man, I don't want to read this. But it does cover, and I'll put in everything I know from the book, that book, my teachings, my knowledge, into the type of days, and to help you kind of figure out, because if you can figure out the type of day you're having that day, your life just becomes so much easier, to be honest. Like it's going to become much easier to trade. And that requires, of course, patience.
Yeah, I totally agree with you. Jeez.
I have a question about one-on-ones. How would I schedule one-on-one with you, or I guess your schedule when you're available?
Just message me. I have 2 already lined up for next weekend, so I have some room. Usually I try to do less than 10 people because that's usually 10 hours or so. Sometimes more. Some go over, and I have to reschedule others if that happens, right? It just depends on the people's understanding and where they are. So just send me a message and then we can set up and see.
Shorty, I'll send you one whenever you have the time, okay?
Yep. I saw yours, and then I have another 2 people I have to slot in right now.
Okay, because I think I had you as a friend on Discord. I'll try to
Yeah, of
send.
course. Yeah.
Thanks, Shorty.
And you
Thank
guys
you,
know
man.
I do not charge you for this, so this is really complimentary to help you kind of grow and become a trader that you aspire to be. So,
Really appreciate it.
is there anything in this deck that we could add, or if it's different teachings that could help you guys in terms of? I know I'm working on the kid stuff, what I'm doing for my kids. So I will not present that unless you guys need me to. It's going to be fairly simple. What I do for them in terms of growing their accounts. I don't do necessarily the 529s and whatnot, just because of how they grow. But I do my own stuff for the kids, where I invest, how I kind of teach him about the finance. And even if you don't have kids, I strongly suggest you think about the plan or what you will or not do for the kiddos. So I'll put that. It won't be intensive, maybe 7-10 slides of what I do, and at least open your eyes to some ideas what you can do, right? So I'll share that probably within a week. And then the second one is a lot of you guys were interested in understanding the fundamentals of like earnings and understanding the 3 statements, right? And what to look for when you're looking for a long-term, let's say, growth stock that you want to hold, you want to be a long-term buyer at a level and eventually a long-term seller. So I have some help that I'm working with somebody from the Discord to put that along with the kind of like a template in Excel where you would take certain numbers, you would plug them in, and it would tell you at least the feedback from my idea on how I see it, and if it recommends kind of, hey, this is something I would look at or not. And sometimes, when you look at things like, for instance, NVIDIA earnings, I wasn't really impressive with it like currently. So for me, I'm not a buyer here. Would I be a buyer of NVIDIA again if it dips to 100 or below? Yeah, I'll be there. The price to earnings would drop, not be at the record highs and price being below. So there are certain things that I look at, and I'm going to put that also in a presentation so you guys can look at it, right? And this is also, comes from experience. It comes from books. It comes from learnings. Neil, if you look at him, if you look at, Warren Buffett, there are certain rules they go off of, right? Whether it's EPS, whether it's growth, there's a combo of those that you look at, and as well as just kind of instinct. If you research like CEOs, who's leading the company, and CFOs, you can kind of determine what's been done before in the companies if they took over and how it might play out in the future. So I will provide that as well. That's the 2 things on my list to at least provide to this group so you guys can better maybe position and learn more.
Shorty, is there any way that you can provide some fibs?
Yeah, fibs, I can definitely, we have some fib classes. We've took some fib classes, right?
Yeah.
This is standard deviations that we talked about, right? We can definitely do a class on fibs. That should not take very long.
Yeah.
And talk about it, right? Okay. Sequence did develop the clouds. I don't know if you guys saw that. He added some cool adjustments to it. So initially, let me kind of go here. Ugh. My monitors are not aligned anymore. So if you guys, this is not my background, don't get excited. These are the clouds that he added, right? So it's basically mimicking what I have in TOS. The purpose of this is the same as the other clouds. If you guys know the other clouds, they will make lower highs and lower lows. The only way 4 hour will shift up or down is when the cloud's recalculated. So that's at 12:30, right? It recalculates, and then the 4:30 4 hours will shift. Same can be said on the dailies. They're basically recalculated on the daily format, unless significant news come in or shift the price action that breaks the range of that cloud to cause it to shift. But those things are fairly rare, right? And same thing for the daily, and all of the same setups played that we talked about, right? I know the intention of the class wasn't to do this, but the same setup are here, right? So in this case, we had somebody had 15-minute cloud. I like to use 1 hour cloud for the most intraday stuff. So if you guys think about this, you know, you're coming, the 60-hour cloud to me, or 1 hour cloud, is really good for intraday levels. And in this case, you guys see what on the 60 hours versus the shading, right? Means that there's a low chance that you're going to break through this cloud. And usually placing, what I like to do in the clouds when they're closed like this is grab fibs, grab the high and low of the fib. I'll make this easier so you guys are not confused here. And let's make this white because this guy has white. And what I would do here is I would grab the length of the cloud. So I'm buying here, and this would be my stop loss here. And if this stop loss is, you know, let's say according to your rules, fairly high, you can find the range between this half and look for 50% again, or use it based on the volume profile. And you see here, you know, if you took out the whole chance here, you would be pretty much at like 75%. This could be your stop loss for a trade. You close below this, and now your risk is managed. So let me go here, sorry, here. So if this was the idea, you're getting in here and you're going, if you're going this way and you know this is our 4-hour bottom and this is our daily bottom, you could have a target here or initial target here. And this is not a bad trade, 2.6 to 1, I'd probably take that. So that's how you can use these clouds and kind of seeing the bigger picture as well. So if I was to look at SPY right now, right? So I have these clouds, and you can change these clouds to be, let's say, 1 hour, daily, weekly. I can put this one on the monthly. And now I shifted my behavior to see where we are in the long term, right? So I quickly can tell, you know, my weekly and the monthly bottom here are overlapping. So once we lose this blue line here, which should be our weekly middle, there's high odds that we're going to be here quickly. If we are able to reclaim this level, let's say this one is going to change on Monday. If we are able to reclaim that level, because right now we are below the 4 hours, you guys see the yellow cloud, we are below it and it's open. So if we come back here, something like this, and come back here, this is a go ahead. You know, if you come back here, there's a high chance you go here, which is $5. Right? This range is going to be quick. It was quick here. It's going to be quick again if it's reclaimed. So that's something I would look for when I'm looking at clouds. When you see lines, like dotted lines like this is where Shorty is not willing to trade. I'm not going to trade in this area because I can expect chop in this area. Okay. And then in between here, you guys see how these levels have a little bit of movement in between them. That's where you want to be cautious of, you know, price action, consolidating, moving. Right now, it seems like if you just look at the number of lines below and above, there's a lot more resistance now than there is support here. You guys see that?
Yeah, so much space down below.
Yeah, so if we are able to lose, let's say this line here, we're going to be quick. And I mean super quick here. If you're able to break this top here, which was, let's call it 523.5, then you open up the gates to the upside. And this also happens to be, it would trigger a really strong bull market to the upside. And then if you're trading, you know, let's say you're really into a scalping mode, I would probably refer to something like this in the clouds. I would have my 1 hour, I would have my 30 minutes, and I usually like 5. Okay, and there's one cloud that I hate the most, and that's the 5-minute cloud. I hate it because of the fucking accuracy that it provides. And usually when I was in a mid trades, like let's say I want to just pay attention to the 5-minute cloud for now. This cloud it's based on 5 minutes, so it's going to of course fluctuate, but the tops and bottoms of a 5-minute cloud are deadly on terms of bounces and rejections. If you guys look here, this is your 5-minute clouds. Here goes inside. This is what you play. This is simple play on the clouds, guys. We dip below, you come back. Drew, are you on active?
I am. Yeah.
What is this play right here?
That's a bullish money shot.
Guys, it works. I would say it works. I don't know. I would say it works 100% of the time. And especially, let's say we got in here and this cloud closed and you're coming back on a cloud that's closed here and retesting. Oh man, it becomes so good that it's hard to ignore.
I'm so
And same,
confused. You never taught me about 5-minute clouds, Shorty.
well, I call them the godly clouds. They really piss me off when I'm in a trade and there's a stupid 5-minute cloud that it needs to break and they just can't break it. They annoy me and I hate them. I personally hate them. But they're really good.
Sounds like I
And
should
maybe,
have known about them.
yeah.
What's the settings on that, Shorty?
Well, you can change this. I just used 5-minute. This one is 10 minutes, but 5-minute clouds. If you're gonna be scalping, I would use 5 and 15-minute all day, every day.
I'm like literally adding them to my chart now.
Well, they're on my toss. If you guys think about, I don't have toss up right now. They're on my bottom left. I made them black and gray just so I can see them, but quickly ignore them. But they usually fuck me over, to be honest. If you can break the 5 top or bottom, there's usually a sign that you can make some money also on the downside retest bearish backdoors. And I'm not saying you gotta use this, but I'm giving you more ammo on how you can use this. If you look at this, you came back here, 15 is closed. It's signifying there's a high chance we're gonna bounce here. And then you see here, your 5 is closed, 15 is open.
It's crazy that same place which is closed, it's also closed in 30 minutes. Oh yeah, here you have it.
Let me add 30 minutes. And now you see the odds.
I think I'm gonna add 5 minutes and 30 to my charts.
Dude, 5 minutes, I swear my life, is the most annoying cloud and most accurate cloud I would see. So this is the combo I would use probably on intraday levels, guys. 30, 15, 5. If you're happy, you can use the 1 hour, but that I love this setup right here, what you're seeing. And if I should bring up my toss, this is exact setup that I use on my bottom left of toss. It's 35, 15, 1 hour. So now, you break the top of, let's say, this cloud. You'll most likely go here, retest on this scale. High chance you go to 400. You break this, high chance you go to 401. And then you saw that there's a little bit more space in 4 hours to all the way to like 405 on bigger pictures. So just don't trade it. Just look at it. Let's say on Monday, see how this works and go from there. I would, and especially if you use Ashi candles, I would suggest you do, but it's up to you.
You said like switching, like totally just switching to Ashi, or do you sometimes switch back?
Well, price action, right? If I'm looking at price action, I can't determine price action based on Ashi candles because the Ashi candle is considered a previous candle open and closed to start a new candle. Regular candles don't account for that. Hence, you can see if there's gaps or if there's volume imbalance between candles. I can spot that on regular candles. On Ashi candles, you can't do that.
Oh, okay.
Yeah. You cannot use Ashi candles for price action analysis. It's momentum, basically.
That makes sense.
Maybe Monday I'll just trade using this and I'll show you guys how it works.
That'd be cool.
But this is pretty powerful stuff. And AMD, I would say AMD is really good at this. If I was to trade any stock on these clouds besides SPYs and Qs, would be AMD. And here's
would it be able, like, would Sequence be able to add like the word mid on those lines, like the way we have for clouds, like 1 hour top, 1 hour bottom?
Yeah, I mean, he can do it the way I do it, to be honest. So if you look at this, color, right? I know 15 is pink. For me, 15 mid is pink. He can definitely add the labels though, yeah. We can ask him. And we have it on the other clouds, I believe. It tells you whatever weak, mid, or I correlate them to colors, but we can definitely add that here. I just think I don't like too many texts. But if you guys need it, maybe he can make it an option where, show mid labels or something. But this stuff's pretty accurate, guys. This is Usually for intradays, this is the setup I would use. And then I don't know if I disabled 1 hour. No, I didn't, but 1 hour is here. I would definitely use. And you see here, in this case, let's say if this price was to drop AMD to this level, it's a pretty good level, especially if this cloud is closed.
Pretty wild.
Say it again.
It's pretty wild, like how accurate they are.
They are, and you know, the basis of this starts with the average true range. So they figure out based on the previous action and current action, where's the top based on the true range that the stock typically does and the behavior of that day. So it does use other days and set up the probabilities. And here's Qs. Qs are good on it as well. Here's your Qs. Look at these clouds. All of pretty much the clouds are closed on the bottom here. So here ideal, you know, 290, but look at this. Reclaim, go long. Rejections here. I mean, this is, and you can determine stop losses fairly quickly using this. At least I can. Maybe just the way I know it, but you know, if I'm buying here, I can put a stop loss below this line or below this line and design my pattern for long position, right? So let's say I'm buying the reclaim of this level. There's multiple ways I can play it. I can put it below this level right here, right? And then I can determine my targets. If my first target is here, that's 1.5, then in this case, it would be stupid for me to give them this much stop loss. I can basically put it right below this green line, and now I have a really good trade. You guys see that or no? Then my next trade, let's say if I was like, okay, well, I want the mid of this gray line right here, which would be, what's this, 4 is 5 minutes. I guess I see how it can be helpful for you to have labels. If this was my target, now I see that, right? And I could determine my risk a little bit better. And not always do you want this ratio to be super high. Yes, there's instances if there was no lines here, if this pink line wasn't here or purple line, and maybe this would be a target here, and maybe I would, you know, keep my stop loss something like this. Ratio is good, but you got to think about it. They will help you with the space as well. You see how first time they came here, they rejected here. So you want to consider the stop losses based on the levels. There's a lot of support here. You know, a risk free would be, you know, there's a lower chance that you're going to break this here. And then you see this one is pretty bottom of the 15 is shaded as well. So that would signify closing on the bottom. So if I was to go here and trade, if this was my entry, I would keep this stop loss and I would keep this target, let's say here, as this one, and that's a 3-to-1 trade. Is anyone confused? It's okay if you are. I mean, it's
Oh
some of
hell
you guys.
yeah! I'm
Yes,
gonna
I
need
am.
time. Oh god, yeah. But it doesn't matter. That's I get what
Yeah, so
later
think
on.
about the clouds. They're not time frames. This doesn't correspond to your candles. This corresponds to the length of the clouds. So the 16-minute cloud will give you more range. In 60 minutes, typical 60 minutes range is from here to here. That would most of the time mean that you're in a really a high range day, or you're gonna be in a trending day. Okay. And in this case, if you guys look here on Thursday, it was probably there where it bounced off. And I don't know how to do all that back stuff, but you can test it. Right. And it's really useful for intraday stuff. And the longer the cloud, you can make it, of course, for longer time frames. If I was to change this aggregation periods to, let's say, daily, like I did earlier, weekly, you can use 4 hours, but let's say you want it really super longs. And like, let's say I do 12 months, which is pretty wild.
Do you mind posting for intraday where your settings are?
Yeah, I can definitely post that.
Thanks, bro.
Shorty, with respect to the clouds, like if you put it for 5 minutes, like how many points would the cloud move up and down every 5 minutes?
Not a lot. Not a lot. It doesn't
Sure.
move a whole lot. Unless you're, usually when you break, so, you know, if I was to break, let's say, you know, let me go back. let's say I break this 5, the 15, the 30, and 1 hour. If you're to break the top or bottom of these clouds, if you're to break the tops or the bottom of the range, you're gonna explode, meaning you're gonna have one hell of a trend day. As long as you're within these 30, 15, I would say if you're more cautious, if you're gonna be between 30 and 30 bottom, you're gonna be in a typical sideways range day all day. Unless you're breaking, and look what happened as soon as they brought it back to 30 bottom, they bounced it. Usually when you break the 30s on bottom top, you're gonna have a strong directional day. Like a super directional trend. And that's what, on Friday in a few days, I was watching, are we breaking this bottom or not? And usually what happens if you break the bottom here, this is my ideal scenario is, oh, come on, is shorting the back doors, especially if the cloud's closed. Okay. So that's what I look for on if you breaking the clouds. And these, like, of course, 5 minute is going to fluctuate the most in terms of the levels. But if the price is staying, for instance, like here, it doesn't have a lot of to fluctuate with. And if the price was, going up higher, well, that 5 minutes like value area is going to be chasing the price. So it's going to adjust, but the value of that 5 minute cloud at that point is minimal because there's, higher chances you're just going to continue higher and break it or lower. Does that make sense? If you're trending, you do not use, I would say, smaller time frames. You use them to indicate if you're going to go trend day. If you're ranging, these levels become really good for opportunities to buy on the back doors of 15, 30, or even 5. If you go above, retest 5, close, go higher.
Yeah, it makes sense. Thanks.
What the backdoors are? When you say that, you're referring to a rejection off of the top or bottom of a cloud.
That's correct. So different time frames, different backdoors, right? So the bigger the cloud, the better the move probably will. So 30-minute bottom here closed, you're waiting here to enter. If this, let's say, opened and you're coming in here, well, this is a bullish money shot, and you would target the purple line as your target off the same cloud. So this would be a
Oh,
bullish money shot. And then in this case, I'm sorry. In this case, I would target whatever the next line or cloud is, right? So this is where you might have to look at 4 hours to see what's the level that's here or whatever time frame, right? Based on the clouds, if that's the only thing you're using.
that makes a lot of sense.
Yeah, so backdoors occur on the top once you break from inside out. So, your backdoor here would be this bullish backdoor. Your bearish backdoor, let me use just the same cloud. So in this case, this is bullish backdoor. In this case right here, this should have been a bearish backdoor here. And here they went inside, so that failed. And then the bullish money shot would be if it goes here inside this inside, and your first target's here, second target's there. If you fall in here, this is your target first, and then the second target there. So your shorting is here, and here, and your long is here and here. That's the only place you play on the clouds.
For people that have access to it, if you have the full send indicator and you find like a full send up or down, and then you check these flat clouds for like empty space, and then find like a skinny belly on volume profile, you have like a deadly trade. Like they don't miss very often.
If you have space, like he said, and the FSD shows up here, and let's say there's a volume anomaly.
Well, I'm just saying for me, like
Yeah.
I use full send, the clouds, and then skinny bellies, and if I have all three of those as confluence, like they're just deadly trades.
Yeah, I would never go against that.
That's what I trade. That's what I'm doing for this 1K challenge.
Seem to be doing okay with it.
It's working.
Yep. And when I first introduced catching to this, he was like, "What?"
Oh man, because I've been staring at the regular clouds for so long, and this is so easy to look at all of them like on one chart. Dude, it's
Yeah, the
disgusting.
lines are so much easier.
Yeah.
Yeah. But I would say the levels that you guys will have with these clouds, especially, you know, I'm talking about like longer periods of clouds like these, that they become super deadly in terms of accuracy and giving you the space on where it might go or where it might not go. And I think they can be like super important for you to understand this. So let's see here. Look where we are right now. So quarterly top, we came in 13 points away from it. So, and the cloud's closed. Did I not select these?
We actually tapped it, I think, not too long ago. I guess it's, you know, 12-12. It was pretty close.
Yeah. And here's your yearly cloud. So if you come into 3,300, I would say you have a strong chance of a massive buying here at this level.
Weekly bottom is like that 3600 level, or is
Yeah,
that
it's 3680. Well, yeah, it's moved 3676. Once we lose this, there's remember that level I mentioned? I think it
yeah
was
Friday?
if you lose this, you're gonna flush. So, and this level here would be, I don't know how they get above 4,500, but if they do, they can make this quick. Okay. Well, hopefully, you know, today's session, I didn't plan on this, but, you know, since Sequence did develop, and I know some of you guys are newer in the Discord, I just want to touch base on it. But you can definitely use this setup, and, you know, for the intraday, like I mentioned, you want to do 30 minutes, 15 minutes, 5, least favorite cloud, and I usually have 1 hour here. And remember, if your highest cloud is 1 hour, you cannot see clouds when you're above 1 hour. Your time frame selection here, you know, you shouldn't use higher than the time frame of the cloud. So here, you know, these are 5 tops, 60, 15, 30. And then even if you don't use 60 for trading, it's just good to have to know where the range is in between. You know, if you break this level, high chance you go here. So just watch it, and I would definitely try, if you're not familiar with anything else in terms of trading, volume profiles, and market structure, if that all of that is over your head now, it's really becomes simple. At least know where you balance open, high, and low, and then see how we play. And I promise you, this alone can help you a lot. Definitely use Ashi candles on this. I would not suggest you guys use regular candles. The whole concept of my strategy on the clouds was built on Ashi candles. I don't care about price action. I care about the accuracy it provides. Like if you look here, I mean, deadly rejection here off the cloud closed. You know, 5 top rejected it, went to the, usually when the cloud's in the middle, just be aware of this. If this cloud is closed at this time, and there's a bunch of clouds open in between, and there's one that's closed, they're most likely going to go for the closed test. Does that make sense? Think of these as the extreme tests, and they usually like to test the clouds where they're closed. Like you see how here, I guarantee you, as this cloud was closed here, that this one on 5 minutes was also closing on the top, and the 5 minute will be opening on the bottom, if that makes sense. And then when they pushed it, that they immediately targeted the cloud closed here, because they know where the stop losses are. They're right above it, resting.
Shorty had a quick question. Can we just use like regular candles, or just the accuracy won't be as good as the Ashi candle?
Ashi candles are designed for the clouds. So you can use regular candles, right? You will have the same, but they will help you avoid, you know, the anxiety, because you see them building up here. Sometimes people react on a single, let's say 3-minute candle, right? They will react on certain, you see how here it would indicate a lot of potential for shifting down. And then you look at it here, and, you know, the body never went below. and here body went below.
The only thing with Ashy, if you're gonna once you chart on SPY, you have to do it on if you go from candles to Ashy, it does shift your lines a bit.
Yep.
So you gotta be careful with that.
Is that the same for ES and MES as well?
It
Those
will
two
shift
together?
everywhere, yeah.
Okay.
And we can maybe hold some classes and I'll trade live using the clouds and show you how it works.
Oh, so the mids, I guess, are those kind of useful as like first targets?
But they're always the first target. So if you're in
Okay.
a 30-minute cloud, for instance, 30 top, if you short here, your 30 bottom is the first target. If you're shorting, let's say 5 top, you want to trim some here, it will most likely go to the bottom to complete the full cycle. But you want to trim, take your targets and levels, right? No trader should hold from here to the bottom and always get that, right? The market, while it's efficient, it's also unpredictable. So that's why you want to take the profit, trim here and get out, right? I think Bitcoin is live, right? Doesn't that one trade all the time? So here's, for example, Bitcoin right now. This is live, right? I think it's live. Did I
I saw
grab
it
one that,
moving a bit earlier.
am I selecting the correct one or no? I don't know if anyone knows.
BTC USD,
Is it
Yeah.
this one?
Coinbase one. Yeah, that's the one.
Okay, so, you see here a lot of, there's potentially a bounce here coming. So if you look at this. So if they go here, there's a bounce, but the 15 bottom will be a nice support here. And then you see here, if you're to make it to the 60 bottom, this would be a good zone to buy some and get a reaction at least to, what is this? 40 points on Bitcoin. Of course, I don't trade it, but you can watch the reaction and see it. And you can definitely use replay. I'm not really good at it, but you can definitely use replay and see how it develops and works. Okay. All right, well, that's all I had for today. We'll do a watch list later on in the night. It won't be long. We'll cover the levels on ES and see where we are in terms of the range. And I would expect that you guys have some opinions and biases coming in. So that way we can kind of, as a group, start figuring stuff out and putting the jigsaw puzzle together.
What time, Shorty, for the watch list?
Let me see. I have a birthday to attend. Let me see, what time is it now? It's 12:30. I'll probably leave. Let's shoot for 9, just because I have to get the kids ready for school tomorrow.
All right,
Awesome.
cool.
Yep.
I'll schedule it.
Oh
Thank
yeah,
you guys, and
I sent
Thanks
you
a
a
lot,
tweet.
Shorty. Have a good
Thanks,
day.
Shorty.
Thanks so much.
Thank
yeah,
you
just
very much.
message
sir.
me here. I think you're gonna ask me something. Just send me a message.
Okay. Oh yeah, it won't let me. Like it keeps saying it's blocked because I don't have you as a friend.
Send me a friend request.
Okay.
I have fucking 1,000 requests. Send me a request.
Okay.
Okay.
Hey,
See ya.
thanks a lot, Shorty.
Thanks
All
so
right.
much.
Bye bye.
See you guys tonight.
See you guys. Have a good day.
Thanks, Stu.
Later, guys.
See you, Rockets.
See you, Rockets. Love you, brother.
Love you, man. Have a good day. All right, so people are asking about the clouds. These are all basically private indicators to Shorty's Discord. Well, not all of them, but the ones that say Simple Trader 77 are all from Shorty's Discord. So the only way to get access to these, at least that I know of, is to be a member of his Discord. And then this is the straight clouds here. I mean, you can search for this, you'll see it, but it's going to be locked. And the only way to get it unlocked is to be a member of the Discord. Anyway, have a good day, everybody. We'll see you 9 o'clock Eastern for the watch list. Bye.